What's up, everybody? This is Sunko, the Korean bro. Today is 2023, March 7th. What I'm going to look at is articles published, and then after that, uh, I'm going to look at the company named Twilio. Okay. Hmm. Okay. Let's see. Okay. Let's see. Hmm. Okay. Better ad tech stock. The trade desk versus magnet. The Trade Desk and Magnet both offer publishers and advertisers ways to escape the umbrella of big tech companies. The Trade Desk stable growth and ongoing innovations could make it the preferred advertising platform for the open internet. Magnet is more dependent on acquisitions, and its fragmented business faces more near-term headwinds. Which of these open internet advertising companies is a better buy? Let's see. Both stocks lost their luster as rising rates and other macro headwinds caused companies to curb their spending on ads. Cautious investors also abandoned higher growth tech stocks in favor of cheaper value plays. But could either of these fallen ad tech stocks bounce back this year? Mm, The difference between the trade desk the trade desk and Magnet are both independent platforms, but they sit at opposite ends of the advertising supply chain. The trade desk is a demand side platform which allows advertisers to bid on ad space across a wide range of platforms, while Magnet operates a sell-side platform, which helps publishers sell their own ad inventories. These two companies are the largest independent players in their respective markets. DSPs typically work in tandem with SSPs to sell digital ads. Google and Meta bundle together DSPs, SSPs, and other advertising services, but they're not independent platforms. However, the Trade Desk recently launched OpenPath, a new feature that bypasses SSPs like Magnet to connect publishers to advertisers. The feature could make it a more diversified advertising company like Google or Meta, but could also hurt Magnet and other SSPs. The Trade Desk revenue rose 26% in 2020, even as the pandemic throttled the market's demand for digital ads. But in 2021, its revenue increased 43% as the advertising market recovered. In 2022, its revenue rose 32% to $1.58 billion, even as the inflation rattled the markets and Apple's iOS update prevented many advertisers. Hmm, Blah, blah, blah. The obvious winner is the Trade Desk. The Trade Desk traded a significant premium to Magnet, but its stronger growth, higher margins, clearer business model, and ongoing innovations make it a better long term investment. Magnet might eventually bounce back, but it needs to stabilize its CTV business. Mm. CTV business and generate consistent organic growth before the bullish comeback. Okay, so here the author mentions the reasons why you should buy the trade desk over Magnet. Hmm. Okay, next, Rivian has an ace in the hole, but not for long. Rivian stock is a floundering because the company keeps missing estimate and is burning through cash. But the company has set reasonable expectations for 2023 and is confident it can reach positive gross margins in 2024. This electric vehicle automaker has a small window to get to positive free cash flow. Stock has been under pressure since the company went public in November 2021, burning through cash. Most companies have more debt than cash on the balance sheet. Hmm. A manageable level of debt can even be healthy. But some capital intensive businesses like railroads, airlines, oil gas companies, and automakers tend to have a lot more debt than cash. One of the few automakers with a net cash position is Tesla. Tesla's net cash position is a relatively new development, and it took years for the company to become consistently profitable and free cash flow positive. But because it generates more cash than it uses, uh, its operations don't deploy cash from the balance sheet. Rivian isn't in the same position yet. The company is highly unprofitable and burning through cash at a breakneck pace. Used at $2.62 billion in net cash and operating activity in 2021, $505 billion in 2022. For 2023, Rivian expects around $2 billion in capital expenditures. For 2024, as it scales production, it sees cash burn improving by 40% compared to 2023. Rivian said it is confident it can fund its operations with its remaining cash and cash equivalents through 2025. Put another way, it will deploy its existing cash, then do another capital raise. If it's not yet FCF positive, so it doesn't have to raise cash. That's big. If given how unprofitable the company is today. Hmm. As its business is not sustainable and management knows it, the companies behind many traditional value stocks are FCF positive and have a lot of cash on the balance sheet that they don't need to run the business. But Rivian's current treasure trove of cash is a fleeting feather in its cap. Billionaire investor Leon Cooper may be retired, but he's still betting on the stock. Ghana owns USA Today and is the largest news publisher in the US. Its business has struggled due to the rapidly transforming news industry and high debt levels, but Gannett has the potential to unlock a lot of value. This magnificent dividend stack is capturing a potentially massive opportunity. Three artificial intelligence stocks with 54% to 675% upside. Artificial intelligence has been anointed as Wall Street's next big thing investment. Various analysts and pundits believe these high growth AI inspired businesses offer significant upside. Based on the high water price targets of select analysts and Wall Street pundits, these fast paced AI stocks are poised to skyrocket. No matter how well or poorly the stock market is performing, you can always count on a next big thing investment creating a buzz in Wall Street. In 2023, that next big thing investment is artificial intelligence. AI involves utilizing software, systems, and machines to handle tasks normally overseen by humans. The machine learning capabilities of AI give the technology broader application and mean its growth potential isn't confined to any one sector or industry. Although estimates vary widely regarding rate of AI adoption, eventual market value, the Grand View research foresees substantial growth. A recent release report calls for a blazing compound annual growth rate of 37.3% for the global AI market between 2023 and 2030. This potential certainly isn't lost on Wall Street institutions. analysts, and pundits. According to Wall Street, the following three artificial intelligence stocks possess upside potential of between 54% and 675%. CrowdStrike Holdings. CrowdStrike Holdings. AI-driven company that one Wall Street analysts believe could soar over the next years is a cybersecurity stock CrowdStrike Holdings. Analyst Trevor Walsh of JMP Securities foresees CrowdStrike reaching $235 per share, which would equate to 86% upside from where the company ended this past week. AI is absolutely integral to what CrowdStrike does to protect to end users from various cyber threats. The company's cloud-native platform, Falcon, leans on AI and machine learning capabilities to oversee trillions of events each week. Every single event adds to the Falcon's database. It makes it more efficient at recognizing and responding to potential threats over time. The true test of Falcon's worth can be seen in CrowdStrike quarterly gross retention rate. Even though there are cheaper cybersecurity solutions available for end users, CrowdStrike gross retention rate has climbed from 93% to more than 98% between early fiscal 2018 and the end of fiscal 2022. Existing subscribers are willingly paying more for CrowdStrike's cloud-based software as a service solutions. But that's not all. In addition to staying loyal to CrowdStrike, the company's 21,146 subscribers have been sadly adding to their initial purchase. More than 5 years ago, fewer than 1 out of 10 subscribers had purchased 4 or more cloud module subscriptions. As of the company's fiscal third quarter report for 2023, 60% of its 21,146 clients had purchased at least 5 cloud module subscriptions. These add-on sales have pumped the company's adjusted subscription gross margin to almost 80%. As one final note, cybersecurity has effectively become a basic necessity service. Hackers and robbers don't take time off from trying to steal sensitive data just because Wall Street had a bad day. The defensiveness of enterprise-based cybersecurity needs, coupled with a high-margin, subscription-driven operating model, may very well allow CrowdStrike to eventually make a run at JMP Securities' higher water price target. Hmm. One growth stock that could turn $200,000 into $1 million in a decade. The artificial intelligence software market is expected to grow 42% annually to reach $14 trillion by 2030. Riskify uses AI to help e-commerce merchants combat fraud, and the company believes its technology is superior to alternative systems. Riskified. Oh, combat fraud. And the company believes its technology is superior to alternative systems. Riskified gained market share last year, but the company has hardly scratched the surface of its multi-trillion-dollar addressable market. Experts believe artificial intelligence will have a profound impact on the business productivity in the coming years. AI will accelerate software development, automate factory operations, and streamline workflows for employees across virtually every industry. To that end, Art Invest estimated that AI software revenue will grow at 42% annually to reach $14 trillion by 2030. Fintech Riskified is one of many companies that could benefit from that trend. Its market capitalization is currently $965 million, but that figure could easily grow fivefold over the next decade, given that the tailwind behind AI adoption and e-commerce. At that pace, $200,000 invested in the stock today would be worth $1 million by 2033. Here's what investors should know about Riskified. Solving the problem of e-commerce fraud. Riskified believes traditional risk management systems are prone to inaccurate decisions because they lack sufficient data. Traditional risk management systems are prone to inaccurate decisions because they lack sufficient data. That creates a couple of problems for e commerce merchants. They lose revenue when legitimate transactions are declined, and they incur chargeback expenses when illegitimate transactions are approved. Ultimately, both problems have the same outcome. The merchant in question becomes less profitable. Riskify uses big data and AI to solve those problems. The platform leans on AI to correlate buyer behavior with fraud, using data from billions of past transactions as a reference point. Of course, Riskify faces stiff competition from larger payment companies and financial institutions, but its platform features deeper integrations engineered to capture uh, richer data than alternative systems. That theoretically makes its AI better identify legitimate and legitimate transactions. If you'd invested $100 in Shiba Inu at the start of 2021, here's the mind blowing amount you'd have now. Shiba Inu. Hmm. Okay, corporate executives indicate they have no plans to slash cybersecurity spending even in recessions. Zscaler delivers some of the most advanced tools to protect against the growing potential for cloud attacks. Wall Street is overwhelmingly bullish on Zscaler stock. The cybersecurity industry might be investors' best bet against a slowing economy. It's no secret there is some uncertainty about the economy at the moment. With surging inflation and rising interest rates pressuring consumer spending and forcing companies to manage costs more carefully. But even with that uncertainty at the moment, there is one expense the corporate world is reluctant to slash. Investment bank Morgan Stanley surveyed 100 leading chief information officers in mid 2022, and these IT managers indicated that cybersecurity was the least likely expense they'd trim even in the event of a recession. In a similar vein, when asked about the areas where they'd be investing more money, cybersecurity ranked second only behind cloud computing. That was backed up by more recent data from consulting specialist PwC, which asked 4,410 corporate executives how they plan to navigate growing geopolitical risk around the world in 2023. The top response was to ramp up investment in cybersecurity. None of these results are necessarily surprising. Uh, as organizations do more business online, the potential for attack continues to grow, which calls for beefed up cybersecurity strategies. Zscaler is a go-to provider of unique cybersecurity products and has many fans on Wall Street. One analyst firm in particular is betting its stock could soar by 88% from here. The cloud calls for more advanced security. Cloud computing is the technology behind the digital presence of modern day organizations. It allows them to run critical applications online, mm, which means employees can work remotely from almost anywhere in the world. But that leaves the door ajar for malicious hackers who prey on vulnerable access points. Hmm. Zscaler now serves more than 6,000 customers globally. Its high spending cohorts continue to expand rapidly. As of the fiscal 2023 second quarter, it had 380 customers spending at least $1 million per year, up 51% from the year ago period. Hmm. Okay, that's about it with Zscaler. Hmm. And let's see. Let's look at twilio, okay? Twilio. Let's go over to Twilio and read it in depth. Uh, okay, Twilio is the company that I invested in, and like, let's see what they are, okay? Twilio is a cloud communication platform that allows software developers to programmatically make and receive phone calls, send and receive text messages, and perform other communication tasks using a variety of APIs. Twilio provides a suite of communication APIs that can be easily integrated into web and mobile applications, allowing developers to add voice, SMS, MMS, chat video, and other communication features to their applications without having to build the underlying infrastructure themselves. Twilio's platform is used by businesses of all sizes across a variety of industries, including healthcare, finance, retail, and more. Twilio's main product is its cloud communication platform, mm, which provides a variety of APIs and tools for building and integrating communication features into web and mobile applications. The platform includes APIs for voice and video calls, SMS, MMS messaging, chat, and other communication channels. Twilio also offers a programmable phone number service, allowing businesses to purchase and manage phone numbers for use with their applications. Additionally, Twilio offers other products and services such as its Flash Cloud Contact Center solution, which provides a programmable platform for building and managing contact center operations. Its Sandy Grid email API service. There are several benefits to using Twilio's product and service. Ease of integration. Twilio provides a developer-friendly platform that is easy to integrate into web and mobile applications, allowing developers to quickly add communication features without having to build the underlying infrastructure themselves. Flexibility. Twilio's platform supports a variety of communication channels, including voice, SMS, MMS, chat, and video, giving businesses the flexibility to choose the channels that best suit their needs. Scalability. Twilio's cloud communication platform is designed to be highly scalable, allowing businesses to easily scale up or down their communication capabilities as needed. Reliability. Twilio's platform is built on top of a highly reliable, redundant infrastructure, ensuring that communication services are available and reliable even in the event of hardware or software. Okay, let's look at their business model. Okay. Twilio's business model is based on a consumption-based pricing model, which means that customers only pay for the communication services they use. Twilio charges customers based on the volume of API requests they make, with pricing varying by communication channel, volume, and geographic region. In addition to consumption-based pricing, Twilio offers a variety of pricing models for its various products and services. Twilio's programmable voice API charges customers per minute of usage, while its programmable SMS API charges customers per message sent or received. Twilio also offers a variety of subscription-based pricing models for its products and services. For example, Twilio's Flash Cloud Contact Center solution is priced based on number of active users per month, while its Sandy Agreed Email API service offers a variety of subscription plans based on the number of emails sent per month. They offer a variety of uh, subscription-based pricing models for its product and services. The Twilio's pricing model is designed to be flexible and scalable. Allowing businesses to pay only for services they use and scale their communication capabilities as needed. Designed to be flexible and scalable, allowing businesses to pay only for services they use and to scale their communication capabilities as needed. Okay, what is the management ability and ethics of Twilio? Twilio is generally known for having a strong and ethical management team. The company's co-founder CEO Jeff Lawson has been praised for his leadership and commitment to transparency and ethical business practice. In 2020, he published a book titled "Ask Your Developer: How to Harness the Power of Software Developers and Win in the 21st Century," which highlights the importance of ethical leadership and the role of developers in driving innovation and growth. Twilio has also been recognized for its commitment to social responsibility and ethical business practices. The company has a corporate social responsibility program that focuses on the four key areas: education, disaster relief, nonprofit support, hmm, and social justice. Twilio also has a code of ethics and business conduct that outlines its commitment to ethical behavior and compliance with laws and regulations. Overall, Twilio's management team has demonstrated a strong commitment to ethical leadership and social responsibility, which has helped to build trust with customers and investors alike. Okay, enough of Twilio today. Okay, it's been a couple of days since I did YouTube last time, and like I'm a bit tired at this point, so I'll probably do this YouTube thingy tomorrow. Okay, and I'll talk about Twilio in depth tomorrow. Okay, bye bye, everybody. Bye bye.